Well, JSPL has reported a 25% dip in the operational performance on consolidated level, but then the numbers are pretty much in line with estimates. In fact, the unitary EBITDA performance of the company has been better than that of its peers like JSW Steel. Joining us to take the financials forward is the Managing Director of the company, Mr. V.R. Sharma. Hello and welcome to BloombergQuint, sir. I'm going to first ask you about your initial read on the numbers, and also because your standalone EBITDA per ton has been better than that of your peers. So any outlook on that going forward, if we can further see any improvement thereon?
Yes, please. The company has done very well in the Q2 in terms of the production. We have increased our production by 16% on with respect to corresponding year, and the sales have been increased to 14%. The overall production is 1.58 million ton in India and 0.42 million ton in Oman, which is about 2 million ton per quarter. And we had the same numbers in our target. So we will be close to about 6.5 million ton in India and 1.8 million ton in Oman. So total 8.3 million ton. So the growth is a very remarkable growth if we see the industry and we compare with our peer group. So the EBITDA level is also fairly good. 9,400 rupees per ton is the EBITDA, whereas our peer groups, they are less than this. This is what we are expecting. And if you see the overall production by JSPL, we are up by 16%, whereas our peer group, either they are in -3 to 4% or maximum up to 5 to 6% of the growth. There are 5 or 6 industries in the country and we are comparing with them. So we are at 16% growth level. So the company has done very good, but there had been some pressure on the pricing, as you know, because the coking coal prices in Q1 were very high. So we maintain a stock about 3 to 4 months of consumption in the pipeline right from the ports to the plant. And at that time the prices were about $200 plus per ton of the coking coal, which has now come down to about $133 per ton. So the impact of this coking coal pricing will be seen in the Q3 and Q4. And we are expecting a higher number of EBITDA in Q3 and Q4.
All right, that's a solid set of numbers in that case, sir. But I'd like to know more about the export realization and what's the kind of growth that we can look forward from exports in the coming quarter.
You see, export has been a game changer in the country. If you see, whole of the country has been exporting steel even to the Southeast Asian countries as well as into China. And our growth in export is substantial growth. So we have done a growth of about 22% in exports from Q1 to Q2. And we are going to maintain this export levels so that we generate foreign exchange for our as a natural hedge for our imports, and also we reduce the pressure on domestic sales. So we'll continue with this similar kind of export levels in Q3 and Q4.
Right. If you remember, Mr. Sharma, last time that we spoke, you had guided us that you'd already emerged as an H1 bidder, and you said that the savings, in this auction, coal cost would be around 800 to 1,000 rupees per ton. I would now like to know, since you've already, I'm assuming, calculated what's the kind of saving originally as compared to the 3,000 rupee per ton that you usually incur. And when would the mine be operational, and how much incremental EBITDA would you realize from that, and when?
That's a very good question. You asked me the same question earlier also. Yes, very nice question. I'll reply you one by one. Number one, we have been declared a H1 in terms of the highest bidder but what we are expecting now, as soon as we get a letter of confirmation from Government of India, Ministry of Mines, then only we can say that yes, these mines are coming to us. The decision is with the Government of India. We are hopeful that Government of India will take the decision, because they are also going to get a good revenue out of these mines. And these mines have been struggling for the last 6 to 7 years. Their production was very less. They produced only 4.5 to 5 million ton in last 5 years time, whereas we will be in a position to produce about 5 million tons per year. So this will bring a lot of revenue in terms of taxation, in terms of royalties, etc. To the government, and also will ensure our seamless supplies to our power plants as well as to DRI plant. We are very close to these mines, and will be in a position to run our DRI plants fully, as well as we have 540 megawatt of power plant next to the mines, which will be fed through these mines. This is one. Number two, we have another 200 megawatt of captive power plant in about 40 kilometers from these mines, so that will also be serviced from these mines. So overall, we had been procuring coal from 3 different sources. One was imported, so the imports was about 25 to 30%. So these imports will be stopped immediately as soon as we start mining operations. Number 2 was linkage coal. So the linkage coal was about 50%. So that linkage coal was against the e-auction. And then there was another coal which was coming from Coal India, and which was on the long-term power supply or the fuel supply agreement, FSA. So that was available at a very cheap price. That was about 1,000 rupees per ton, and the other coal was about 2,000 rupees, and the imported coal was coming at 3,000 rupees. If we see an average, so average was about 1,800 rupees a ton. So out of 1,800 rupees a ton, if we compare with our own mining and everything, so this will be about 1,100 rupees a ton. So there will be a gain about 700 rupees a ton or 800 rupees a ton. But more than the gain of 700-800 rupees per ton, the seamless supplies will definitely play a vital role, because this will change the economy of scales calculations.
All right. In that case, sir, I'd like to ask you further working to that, because many of the brokerages are suggesting that it will take another 5 to 6 months for the mines to be completely operational and reflect into your financials, if that is correct. And this will bring an incremental EBITDA to an extent of around at least 6 to 7% by FY21. Have I got that right?
Yeah, there are 2 things in it. One is, if we get the confirmation from Government of India and the handing over takes place within next 1.5 month time, say by 31st of December, then we can start mining from 15th of Jan. So then we can find that yes, in the quarter 4, there will be a benefit of continuous supplies to the plant. This is one. Secondly, the question is whether 6% or 8% EBITDA, because today we are at a level about 3 million ton in Raigad, and the moment we have the seamless supplies of coal, we will be in a position to run the plant to level about 3.6 to 3.7 million ton per year. And today our PLF is only 30%, because there is no supply of coal for our power plants. And the moment we have the seamless supplies, the PLF can go to 100%. So definitely, when we have the good PLF and we have the continuity of the business, we have continuity of the power supplying, and we have to continuity of the supplying coal to our DRI plants, this will definitely bring a respite, and this will add to the EBITDA. I don't think that this will take 1 year time or 6 months time, but we can surely we can do in 1.5 to 2 months time, and we'll try to catch up something in Q4.
That's quite encouraging, I must say. In that case, will the company be looking for bidding into other coal blocks? Because there have been a couple of them which have been lined up through the course of the week for itself, including the likes of Jamkhani. Is the company going to be bidding in for that?
Yes, Jamkhani we are bidding.
So in that case, quickly 2 updates then. I'd like to understand power division PLF you said stood at around 30% in this quarter. How much do you expect that improving in the next quarter and Q4, especially when the coal block come in effect?
The PLF today is 30%. We are expecting 95 to 100% the moment we have the fuel supply on seamless basis. And what we are expecting, if Government of India allocates this block to us, then from mid-Jan onwards, we should be in a position to bring the PLF to 95 or 100%.
All right, sir. Thank you so much for your time, and thank you so much for speaking to BloombergQuint. We'll leave it at that.
Thank you. Thank you so much. Thank you. All the best.